Today, we're taking a deep dive into Torrent Pharmaceuticals. This is a company that has strategically climbed its way to the very top of India's pharma market. We'll be looking at data from early February 2026 to break down their powerhouse strategy, look at the bull and bear arguments, and see what the final analyst verdict is. Let's get into it.
All right, first things first, just how big is Torrent Pharma right now in India?
Well, Torrent has really solidified its position. They've moved way beyond being a mid-tier player to become the fifth largest pharmaceutical company in the entire country. And what this really tells us is that they are in a strong fundamental state, built on being a leader in that very profitable branded generics market.
So, how did they manage to get here? The answer really lies in a very deliberate and clever acquisition strategy. This is what's known as their string of pearls strategy, and you can see it in action right here. Look at the progression: Elder, Unichem, Curatio, and then the huge one, JB Chemicals. Now, this isn't just random shopping. It's a masterclass in capital allocation. They find these brands that are, a bit under-optimized, and then they use their own super-efficient sales force to scale them up, building on a really solid history of successful integrations. And that JB Chemicals deal, that's the real game changer. It was finalized in February 2026. And with it, they locked down a controlling 48.8% stake for about 19,000 crore rupees. I mean, this is the deal that truly vaulted them into that top tier. And the logic behind this deal is all about moving into businesses with higher margins. The JB deal gives them an entry point into the contract drug manufacturing space, or CDMO, plus these niche segments like ophthalmology and IVF. And all of this just strengthens their existing core areas in cardiovascular and gastrointestinal therapies. Okay, so that's the strategy. But what's the argument for continued growth? Let's break down the bull case for Torrent Pharma. A really big piece of the puzzle just fell into place for the bulls. Back in January 2026, their Dahej facility got a zero-observation clearance from the US FDA. Now, this is a massive de-risking event. It secures their very valuable US pipeline for the next fiscal year, and it's a huge validation of their quality standards. Now, this right here, this is the core of Torrent's business moat. A staggering 74% of their revenue comes from chronic therapies. We're talking about medicines for long-term conditions. This creates an incredibly resilient, recurring revenue stream that's pretty much shielded from the price erosion you see in other parts of the generics market. So how do they make those chronic brands so successful? It really comes down to superior execution. Torrent's revenue per sales rep is over 10 lakh rupees, which just blows past the industry average. This high productivity is exactly how they squeeze the maximum value out of the brands they buy. And looking ahead, management has set some pretty aggressive profitability targets. They're aiming for an EBITDA, that's their operating profit margin, of 35 to 36% by fiscal year 28. And they expect to get there thanks to synergies from the JB Chemicals integration, plus some planned price hikes. And to cap off the bull case, just look at these two powerful numbers. A superior return on equity of 26.5%, which really speaks to how efficiently they generate profits. On top of that, the JB Chemicals integration alone is expected to add another 300 basis points to their margins by fiscal 27. That's some serious financial firepower backing up the growth story. Of course, no analysis is complete without looking at the risks. So let's flip the coin and look at the bear case. The bears are pointing to two main things: leverage and valuation. That massive JB deal left the company with a debt load of over 12,000 crore rupees. And at the same time, you're looking at a price-to-earnings ratio of around 61 times, which is pretty steep. It raises the question of how much growth is already baked into the price. These issues, plus potential integration risks, form the core of the bear argument. So you have the bull case of chronic dominance and amazing execution up against the bear case of high debt and a rich valuation. So how does the research put this all together? The verdict positions Torrent Pharma as a premier compounder for long-term investors. The thinking is that while the valuation is definitely high, the company's absolute dominance in the domestic chronic therapy market provides a significant safety margin. It's seen as a top-tier defensive holding, with the recommendation being to accumulate on any price tips. And that brings us to the final, crucial question. We've seen the track record, the strategy, the dominance, and the risks. But the whole thing really boils down to this. Can Torrent's proven superior execution successfully digest its biggest acquisition ever and actually grow into the premium valuation the market has already given it? That remains the key question to watch.